Welcome to the weekend edition. My name is Peter Resnick from ShadowTrader.net. Not too much to talk about this week, except we did make some new all-time highs in the S&P with the NDX still lagging. This particular show is going to be a little bit shorter than usual because it's a holiday weekend. I know everybody wants to spend time with their friends and family, so I won't bore you too much. But let's get into some technicals. I've also got a lead story today, which is something that I want everybody to pay attention to because it is something that I think is going to move in a big way between now and the end of the year. Taking a look back at the start, which is how we always begin on our weekend review, you'll note that a lot of these major averages and the sectors themselves, there was a lot of push-pull this week. And at the end of the week, we didn't really advance much, but we know that during the course of the week, we actually did make new all-time highs in the S&P, but not in the NASDAQ, as I was saying. And you can clearly see that, obviously, just here in the top line figures where the NDX failed to make any gains from Monday to Friday. This is, of course, from opens to close of the week. And the S&P was just dead flat at the end of the week. But again, there were obviously some gains made during the week. Russell had a little bit more strength. But here's where it really tells the tale, I thought, is in the sectors, just how mixed up they are. I mean, these are the 11 groups that make up the S&P, starting with technology, going all the way down to real estate by weight. And you can clearly see that it's a lot of push-pull. For every sector, that was positive on the week, there's ones that were negative. I mean, technology finished the week basically flat. Financials did really well. Healthcare did poorly. Consumer discretionary didn't fare so well. Industrials did really poorly. Communications were up just marginally. And again, it's just the tail of the tape here where you see staples were off a lot. That chart is really slamming down to a support level. If you want to take a look at XLP for a potential trade long, you may find it interesting because the staples have just kind of round tripped all the way down to a support level. Energy was strong, utilities were weak, and materials and real estate were about flat. Materials were a little bit strong on the heels of gold. Probably gold had a fantastic week, and we'll talk a little bit more about gold after that. VIX went up a little bit. I don't think there's much of a bet to be made there. I've been saying for a while that you have to really come down hard in order to make like a UVXY type bet, and it's just not there as of yet. Oil was about flat, and Bitcoin had a horrible week. Actually, after rallying back to that 115,000 level, fell all the way back down and closed in like the 108s at the end of the week. So not a good week for Bitcoin. Feels to me like maybe gold is stealing its thunder. Could be. I don't know. I don't try to put forth too many reasons on the ups and downs of crypto. That's a little bit outside of my wheelhouse, but certainly the strength in gold was like a direct opposite contrast to the weakness in Bitcoin. All right, so that's our week in review for this week. And now, most importantly, let's look ahead and let's get into the charts and look at what's really going on. Okay, what's really going on, which means, of course, what's really going on from a technical perspective on the charts. That, of course, is the driving force behind this program because we're very technical and not too fundamental. And we're going to kick it off with some monthly charts this week because we are at the end of the month. We just finished the month of August, so we've got a fresh print on the monthlies. And I'm just going to point out two real things. First, really being that there's nothing on this monthly chart that indicates that anything is going to turn. We can obviously just keep chugging higher. As I've said many times in the past, oftentimes monthly charts are effective and useful when they show large shadows or a certain type of pattern that may imply, that you're going to be higher or lower. I don't see any such said pattern right now, just kind of a chug higher here like this, which could keep going. But what I do see, and I thought it was worth pointing out, is the fact that it is quite steep in terms of this advance in comparison to past advances. If you take a trend line like this, from this low, and you draw right up here and you just touch it to the first level that you touch, which would be the low of August, you can see that the slope of this line is extremely steep. If you do the same exact trend line here and you swing it out to where it touches the first point, which is here, this slope is obviously far less steep. And if you look at this slope, and again, you just want to swing it out to where it touches first, right there, I call that the swing out method. Once again, same thing. As a matter of fact, these two are kind of parallel. So these have the same slope. And you can see how this slope is just so much steeper. So something to think about, I think, going forward is that the rate of advance in the last, say, 4 months coming off that turnaround has been much more aggressive than past advances. And oftentimes that can lead to a situation that's untenable and that will come crashing down in a bit, to have a little bit of a correction. Thus far, nothing seems to rattle this market. We've had plenty of bad news. There was a Fed governor fired this week on Monday. We'll see how that plays out. I don't believe she's left her post as of yet. NVIDIA earnings were not received all that positively, although the stock didn't do all that much to the downside. But regardless, none of this news really rattled the market whatsoever. You can see the S&P closed very close to a new all-time high, and it was able to take out the key 6,500 level by a few points. Now, that is also something worth mentioning, in that overshoots like that of a few handles above, say, a key round number are common, and it doesn't mean that now we're going to blow through and keep going and the next move is going to be 6,600 or whatever. Sometimes these round numbers take a little bit more time to resolve, and things in the market aren't exactly perfect often in terms of talking about round numbers. When you have technical support, technical resistance, more often than not, it can be right to the penny, it can be right on the money, but it's always give or take a couple of points. There can be an overshooter, it can stop ahead of it, etc. The same thing is true of these big round numbers. So just keep in mind that the market has thus far technically resisted at 6,500, even though it went a little bit above that level. All right, let's switch our chart over to the NDX. There's nothing much different in the monthlies. There was a high made during the course of the month, but the difference really occurs on the daily charts, given that we didn't even get close to the high at all. This is something that I was starting to talk about last week in the show, and this week it's the same thing. You can see that we just sort of limped higher with very, very small body candles for the most part, and then on Friday we came down pretty much to kind of like right where we started, and we're right back at this key 21 period moving average. And you see right here we had an undercut of that level. We did it again there and we rallied up, and here we're testing the 21 again. So I think the key thing to note in the NASDAQ is just simply that you want to draw your trend line now from here to here, right? And technically, because we've been able to connect 2 points, we are in a downtrend for now, albeit a very short one, but we'll see. But we have been able to connect the 2 points, which is the minimum that we need to form a downtrend. So what everybody I think should be watching for in terms of the NASDAQ is, can it get back above or not? That, of course, would be a good show of strength and would point the market a bit higher, probably to that round number of the 24,000 level. But if it cannot, then there could be some overhead supply here and it may fall under its own weight. And you should probably be looking at the 23,000 level for that. I myself am not too longed up or shorted up, or however you want to call it, with anything right now. We had a lot of trades roll off in my room at the end of this week. We did put on a number of trades also for September 5th, but I will say we don't have anything that's really very long exposure or big debit or anything like that, or big bets on the call side right now. As a matter of fact, the one more directional bet that we have is on Robinhood, Hotel Oscar Oscar Delta, and that actually is on the downside. I'll actually share that chart with you just for a second. We'll take a quick break from the majors and just to show you this kind of inverted head and shoulders that I feel is forming, or regular head and shoulders, not inverted, head and shoulders here of Hood, and I was thinking potential for lower, but regardless, that's that. I always like to kind of give a little bit of color on what I'm doing exactly, because I really feel like that is where the rubber meets the road, and that is really how I feel about the markets. It's easy to just talk and say, okay, these are the charts or whatever, but it's actually what you're specifically doing. All right, so coming back to NDX, again, we want to stress that we did not make that high. The monthly chart, by the way, looks the same in terms of the steepness. It's the same exact thing. It's very, very steep going up here. So I would technically be a little bit careful with that. And last but not least, the last thing I will just leave you with is that it's not easy for a market such as the S&P to continue to advance, that particular index without this participation from the NASDAQ 100. I know they're two separate things, and the NASDAQ, of course, is much smaller, but I think that this is the lead story, to be honest with you. This is kind of the main thing from a technical perspective to take away, is that the NASDAQ 100 did not make a new all-time high this week, and it is lagging a bit. And to me, looking at this chart pattern, it is at least having potential of a little bit of rollover. So continue to look for that and see if there is some tech weakness next week that kind of pulls things back down a bit. And I think that will also bleed into the S&P and bring some weakness more across the board. Okay, on to our lead story today, which is gold. As I said in the introduction, this is something that I think has the potential to move much, much higher between now and the end of the year. It's got technicals going for it, and it's got fundamentals going for it, right? We recently had some more dovish comments from the Fed that are pointing to, or at least about a 77% chance as we speak, a cut in September. Obviously, gold likes lower rates. That tends to push the yellow metal further. And also there is plenty of uncertainty now with the independence of the Fed coming into question. And also we have to think about how dovish will the Fed be after Powell's term if somebody that's a lot more dovish gets installed at the Fed after Powell. So gold, I think, is kind of front running all of this and has been very, very strong. Today was a very, very strong week for gold. But what's much more important is the bigger technical picture of how gold has been acting. Let's look at this chart together. Gold has been in this consolidation level since like April. We're looking at about 4 months here from about mid-April. So you're looking at about, like I said, about 4 months of consolidation that have just been going sideways here. And at the same time, always making the same high pretty much in the same area. This is the GCZ contract, which is the current front month going out to December, about 90 days or so, give or take a couple. And look at where all of the resistance happened in this contract, always at the same spot. And look where we are now. We're right back there. Once again, we've ended up right back there. So this would be time number 6, actually, that we've actually tested this area. So I think the potential is there to push this further. If you push this down to a monthly chart, which obviously would condense a lot of these days, you can see it very clearly as well, that you've got all this chop here where nothing really happened, and then there's potential for a push further. So the question is now, how high can this go? Obviously, one of the simplest things is always to measure the base or the height of the base and double it. You have a base here that's running from basically 3,200 to 3,585 up here, about 285 points. Let's call it about 250 because these peaks are not as high. So if you take that 3,500 and you add 250, you're probably looking at a minimum target of about 3,750, which on this daily chart doesn't even look that far away. You're talking about a move to about here. That probably wouldn't take that long. But again, my outlook here is a bit longer term, and I'm thinking between now and December we see much, much higher gold prices. Dare I say it, maybe even $4,000 an ounce. How to play it? Obviously, there's plenty of different ways. You don't need me to tell you. You can buy physical, which I've held for many, many years. You can buy the ETFs such as GLD or PHYS, which stands for physical. That's a good one as well. I like to use gold futures because they are a lot of bang for your buck. They're $100 a point in the GCs. I also do options on those futures. I've been saying for a long time that I'm almost always a put seller of put options on gold futures. This whole week I was doing that pretty much every single day, just kind of putting them higher and higher. And the beauty of that, of course, is why I'm so enamored of that is because they have expiries of just 1 day. You don't see that in the GCZ contract here. You have to go back a little bit to the GCV contract to get the expiries that are every single day. They don't have those options out yet in the Z contract, but in the V contract they do. So that's what I do, is I just sell the puts there. But with something like this, in terms of the breakout here at this 3,500 level, I would probably be looking at the Z contract and be looking to accumulate futures contracts long on any pullback, probably starting a position right about now. I already have a few contracts, not too many, very, very small size, around this 35.15 in the Z, and I will be looking on any pullback to get more. One of the things that I think everybody should be looking out for, this will be a tell, I believe, is if there is a pullback in gold that does not make it to these levels. That will be very noteworthy. You'll notice that all this time there's been rotation of like this, 100%, 100%, 100%, and it always goes back to the lows here, right? If it doesn't, and you only go to here, let's say, a good way to play this would be you'd be a buyer on the way down, but when you turn around from that pullback and you retest this key 3,500 level again, probably after that it won't see lower after that, so you could be a buyer once again on that level. And that's basically how I am looking at gold. So again, a little bit of a longer term play. Interest rate policy seems to be favoring it. It's definitely building up an immense amount of pressure, and I do think we could definitely see much, much higher between now and the end of the year in gold. Well, let's take a quick look ahead into next week. Monday, of course, is a holiday. It's Labor Day. The markets are closed, so we've got a long weekend. And on Tuesday, we've got an ISM number, manufacturing index. The economic data is relatively quiet for the most part. Notice that on the Tuesday, there's only the ISM. There's nothing on Wednesday, but Dollar Tree is going to report. Thursday is the usual initial claims, continuing claims. That's always on every Thursday. But also this Thursday is going to be an ISM services number, which is noteworthy. And Lululemon is also going to report. And as you know, I only list the stocks that I'm kind of interested in or that I think are playable. Obviously, I'm not interested in showing you the whole gamut of everything that's reporting. Lulu is one that I'm showcasing here specifically just because the stock has been beaten down so much. So you may want to watch very closely after their earnings report and see what happens, because obviously the potential is there for this thing to move, because again, the chart is quite bearish. It's been beaten down for quite some time. Friday is going to be non-farm payrolls. That, of course, is important. And unemployment rate. Remember, we only get that once a month, and we're just hovering around that 4.2 level. And if you recall, I said this months ago, although nothing's happened since then. I said that this is a leading indicator of recession. If it was to start ticking up, that has not happened at all as of yet. But we'll see if we get any sort of a print that sort of changes the tone. I think you'd have to see at least like a 4.4 or 4.5 to maybe get people talking about it. But of course, given that it's only once a month, it's definitely something to watch. All right, so that is our looking ahead for the week of September 1st through September 5th. Will be a new month, and we'll see what the charts bring us in the month of September. And that is the show for this week. Thank you so much for hanging out with me on this holiday weekend. As I said, a little bit short and sweet due to the fact that it is a holiday. So make sure you enjoy some good quality time with friends and family if you can, and take a rest. It's always nice to have a breather from the markets one extra day. Recap of some of the things we talked about today. I don't see too much different in the technical picture, only that I'm starting to feel, I think concern is too strong of a word, but there's some things here going on, just notably the fact that S&P trajectory on the monthly is very, very steep. There is potential for pullback here, especially given the fact that the NASDAQ is lagging. I'm going to be watching that divergence very, very closely next week to see what happens with these tech stocks, because I do believe they tend to lead the market, and we'll see if things start to roll over. This has been a market that has been extremely characterized by sector rotation. If you're trading actively every day, especially if you're in my room or in any of our other rooms at ShadowTrader.net, you'll know that myself and the other moderators, we touch upon this all the time because it's very, very important. Lots of times people will get ahead of themselves trying to short a market, but not realizing that there are lots of sectors that are still strong. And I didn't want to get too deep into that. We didn't have a sector spotlight in today's show, but take a look through, XLP, XLC, XLI, XLK, etc. Look at those 11 sectors in the S&P on daily charts, and I think you'll agree with me that they are all kind of moving in different directions, and that often is a recipe maybe for just chop. I mean, maybe the market just wants to consolidate for a while before higher in the fall. We know that usually the fall-winter period, starting especially like around November, tends to be a very bullish time, so we shall see. All right. Other than that, gold very strong. This is now the 6th time that we've come up to the 3,500 level, and I think if you keep knocking on the same door over and over, eventually it opens. So I do think higher gold prices now to the end of the year, most definitely, but there could easily be a large advance just over the next couple of weeks as we break out through this key technical level. All right, if you can, hit the like and subscribe button. It always helps out the channel. We do appreciate it. And as always, coming at you from beautiful Los Angeles, California, I wish you good trading and good night.